right, what's up everybody? We'll go ahead and get started here in a moment. Lots of security tonight outside of Trump Tower. This is the corner of East 56th Street and Madison Avenue. And obviously there's a lot to talk about today. Today was the conclusion of the FOMC meeting, and definitely a lot of action. Definitely a lot of action tonight. So we'll get started here in a minute. So as you can see, I think you have the Department of Homeland Security, NYPD, and Secret Service out. 56th Street is probably going to be blocked off forever in between Madison Avenue and 5th. Obviously, this big black building right here is Trump Tower. All right, before we get started, I guess we'll do our quick nightly audio and visual check. So if you guys can hear us and if we are streaming in 1080p, just go ahead and give a thumbs up in the chat so I know. And I have a quick question. I've gotten a few emails about the stream quality. What do you guys think about the quality of the picture? Are you guys getting it in 1080p? Has the quality of the live stream degraded a little bit? Maybe I have to go in and adjust some settings, but on my end it shows 1080p. I'm not too sure about what you guys see. Maybe I'll have to do some troubleshooting tomorrow, but let me know. We're outside of 432 Park Avenue. This building is incredible. Every time you stand directly under it and look up, it's really insane how tall this thing is. All right, looks like everyone is saying it looks good. Maybe it's just some people's internet connections, who knows. But I guess we can go ahead and get started. So good evening, everybody, and welcome back to Walks in Wall Street. Today is Wednesday, September 18th, 2024, and today was the conclusion of the FOMC meeting, or the Federal Open Market Committee meeting, and there was some major action. Now, as we all know, Fed Chair Jerome Powell decided to raise interest rates by 50 basis points. And I was not expecting that. I was not expecting that at all. I was expecting a 25 basis point rate cut as opposed to the 50 basis point rate cut. And I think they overdid it. That's just my personal opinion. I think that sends a really, really strong signal to the market. Obviously, we will talk about that tonight. But the big news of the day is a 50 basis point rate cut by the Federal Reserve. Now, is this a trend towards right back to quantitative easing? Are we right back to easy money in perpetuity? Well, we'll talk about it. Who knows? But first, we'll say hello to everyone in the audience, and we'll go ahead and get the stream started. I see Steve B. What's going on? Shannon. Alan, what's up? I have a few questions for Alan tonight, being in the auto industry. We're going to have a big conversation. Doc 7 is here. Austin City Limits, Professor Dario. Western Mass Dave. Hope you had a good hump day today, middle of the week. Tomorrow is Thursday. Creative is here. Doc 7. What's going on? DC 322 says Trump will be headed back to the Nassau Coliseum. Really? Nassau Coliseum? Now, I don't know if I told you this. The only time that I've ever been to the Nassau Coliseum was when I took the Nassau County police test right when I turned 17 and a half years old. It was on the floor of the Coliseum. I think I got a pretty good score, but I never got a call back. That's the only time I've been there. I don't even know if they play anything in there. It's kind of obsolete. I kind of thought they were going to take it down. Anyway, Lena Sandoval is here, all of our moderators. We're looking at the beautiful 425 Park Avenue. I always like to walk down Park after hours. It's quiet. Looks nice with all the office buildings, have all their lights on. Brawlett Cavs, what's going on? I see Brian. Steve, cheers. Says Tom, having watched the Powell presser today, I'm curious what you think about financial journalism overall. I thought the press members asking questions were terrible, and most were reading questions. Yeah, I mean, from what I've heard, and I don't know if I can confirm this, but all of the questions that are asked are vetted beforehand. Now, I don't know if that's true. That's just speculation and what I've heard from some credible sources. So a lot of these press conferences, right, when the Fed chair is taking questions, those have already been submitted beforehand, and he knows which questions are going to be asked. So we'll see. And I think they do that for two reasons. Number one, there's probably a big conversation beforehand to say, hey, which questions are not going to spook the market and freak a lot of people out? Because if you kind of have like a rogue independent journalist in there, you know, really, really pressing hard, that can freak people out, which I get. I'm not saying I'm for or against it, but if I had to make a bet, I would say that most likely all of the questions are pre-vetted to the Fed chair. That's just kind of my opinion. But the market had a pretty interesting reaction, right? We pretty much reversed all the gains of the day and closed right at the lows. Now, there is an old saying on Wall Street, and I believe we've talked about this before. The old saying is the first move after a Fed speech is usually the wrong move. It's usually kind of what the old saying goes. But in my personal opinion, I'll just cut right to the chase as we get in the stream here. I don't think they needed to do 50 basis points. I think that was a little bit too much. I think that was a little bit too aggressive, because personally, as we're outside the Ferrari showroom here, I believe that opens us up to potentially running the risk to re-accelerate inflation. Now, yes, all of the leading economic indicators point to pretty much a victory over inflation, right? Shelter tends to be a lagging economic indicator, and that has been coming down quite steadily month over month and year over year. Additionally, you've had energy prices come down. You've had crude oil and gasoline prices come down in a major way. I believe as of doing this broadcast, crude oil is trading roughly at $69 a barrel, so we're below 70, which is very, very encouraging, especially if you think about where we hit a cycle top in crude oil, which was about $130 a barrel back in 2022. The concern, again, kind of to reiterate, is if you cut too aggressively too soon, yes, you run the risk of re-accelerating that inflation, right? That's up for debate. Maybe it'll happen, maybe it won't. But also, it could potentially send the wrong message to the market that, okay, is a recession coming up? Do we think we're in a recession? Why do we need to stimulate when the market is at near all-time record highs? We seem to have a pretty bifurcated economy. So that's my opinion. I want to know what you guys think. I believe the Fed chair and the Federal Reserve didn't have to go that big with 50. I think 25 basis points would have been fine enough. It would have probably been a little bit negligible in my opinion, not make much of a difference, but signal to the market that it is time to begin cutting rates. But a 50 basis point rate cut like that, I mean, that's pretty big. It's pretty sizable. Doc 7 says the market needs to clean their ears and stop overreacting. Anna says, yeah, I know, I'm car shopping while we're doing the stream. Not a huge car guy though. These cars are probably what? $250,000 and up, maybe even more. Who knows? Hey, Mohammed Yusuf from Egypt says, hey Tom, congratulations on 56,000 subs. That's right, I think we just hit that today, by the way. So thank you to all of our Walks in Wall Street viewers for watching and supporting. I think this is an awesome program. Lets us interact, talk about the markets, share our different ideas, and also meet a lot of cool people too. So thank you to everyone who's been a part of it and for watching. I really appreciate it. Michael G says, Tom, you called it though at the end of last night's stream. You went out on a limb and said a half a point. I think I did, as kind of like a meme. Definitely not expecting it, but you are correct. When we were doing our guesses, right, our forecast for what the result will be today at the conclusion of the FOMC meeting, I think everyone in the audience was like, yeah, 25 basis points, 25 basis points. In all fairness, I thought the exact same thing, but I'm like, to be a contrarian, I'll throw up 50 basis points. Was not expecting it though, but I will take the credit. Hey, Charles Hong, what's up? This is Yotam, what's up from DC? What's going on, Charles? I think we were talking back and forth a little bit about Korea, and I want to go back. I want to go back to Korea, and I want to go back, well, not go back, I want to go to Singapore. I wasn't able to do that, but Korea was fantastic. Fantastic stuff. Random Walks is rates, but manufacturing, that is the real economy, is still going down. Well, there's definitely weakness in the manufacturing sector. Coming up here October 1, not to jump too far ahead, we still got 2 weeks left of September, but that is when we are going to get the PMIs, the Institute for Supply Management PMI numbers, and they have been kind of stagnating out a little bit. However, I think that's the point we're trying to make, right? If you go big, which the Fed did today, I believe they went big with the 50 basis point rate cut, that could potentially send the message to the market that, whoa, are all of the experts fearing that we're about to go into recession and we need to start stimulating the economy? Because you can't make both arguments, right? That's kind of my concern. You can't make the argument that the economy is so strong and everything is doing wonderful, but then say, okay, well then why do we need to cut by 50 basis points right off the bat? Now, if you look at the futures market, that's actually pricing in already, I believe, a 3% Fed funds rate. I think I have the, let me actually pull it up. I have my other phone that's charged, surprisingly. Dan Tapiaro tweeted this out about a day ago, and if you don't know who Dan is, I would highly suggest you follow him on X. He's a great guy. I had the pleasure of meeting him a few times. We connect on cryptocurrencies and Bitcoin, but this is his X account. Dan Tapiaro, managing partner of 10T Fund. Now, he got his start on Wall Street as a junior trader working under Stanley Druckenmiller. So really, really good guy, tons of experience, super successful. And he tweeted out the following. Hold on, so let me focus the camera. Okay. He says, for those who don't follow forward financial indicators, be aware that the market already priced June 2025 Fed funds at 3.1% and December 2025 Fed funds at 2.8%. Yes, crypto people, where do you think Bitcoin will be after the Fed cuts 200 basis points? I bet not 60,000. I agree with that as well. If you're not interested in the crypto stuff, you could just ignore that. But just look what the market is pricing in. The market is essentially saying that the Fed is going to go all the way back to quantitative easing, print a bunch of money, and go back to easy monetary policy conditions. So hey, you never know. Maybe we'll get even more rate cuts by the end of the year. Solo 401, good to see you. We're now standing outside of one of my favorite buildings in all of New York City. This is the Seagram Building, 375 Park Avenue. Our good friend Western Mass Dave sent me an awesome book on the Seagram Building, which I appreciate. It's actually up on my office little bookshelf right now. NBA Elias, good to see you. Cheers. Let me catch up on some of the comments. Richard Scott says 50 basis points. Is this politically motivated? Now, what do you think? I guess that's a good question for the audience. We won't get too much into the politics of it, but I think it is a fair question. I have my opinions, but I'd like to know what you guys think. So I'll ask very directly to the audience. Do you believe what happened today at the conclusion of the FOMC meeting, the decision to cut interest rates by 50 basis points, was that politically motivated, yes or no? Now, nobody knows the right answer. We're just all speculating. But what do you think, yes or no? Politically motivated or not? Hey, Diana is here. Paul McNeely says, evening, Tom. What's going on? What's up, Paul? Thanks for joining us here on Park Avenue. So Robert says no. Doc Sevens is not political. Austin City Limits says no. The LT Prod says yes. Cole says yes, big time. Hey, New England Crypto, what's going on? TC says yes. Shannon says partly yes. Siva says no. Jimmy says yes, very political. MD says no. Western Mass Dave says I don't think so. No. So we're kind of split 50-50, which makes sense. That's that seems fair, right? We have a very diverse audience. Solo 401 says everything is politically motivated. Now, it is true, right, to kind of state the facts, it is true that some members of Congress actually wrote letters to the Fed chair requesting as high as 75 basis points worth of cuts. Now, the argument on one side of the aisle would be easier monetary conditions, lower interest rates would benefit the Democrats this election cycle. That's one argument. But my argument for the other side of that, kind of the flip side, is, and we briefly touched on this yesterday, so apologize if I sound like a broken record, but it's important to review it. Assuming all of the data that we have out right now is correct about the number one concern for voters, assuming that's correct, we don't know if it is, but the number one concern for voters right now is inflation. If you turn on CNN, Fox News, and they do the street interviews, everyone has the same complaint. Gas is too high, which although gas is coming down, food is too high, rent is too high, shelter costs, insurance, both homeowners insurance, auto insurance, health insurance, you name it, it's expensive. This is Evercore, by the way. This is a boutique investment bank. I actually long that stock this year. All the boutiques are doing quite well. So assuming that is correct, why would it be in the Democrats' best interest to have significant rate cuts before the election, right? If there's a high possibility that we have a resurgence in inflation. Because there's no guarantee that we cut rates by 50 basis points and we continue to see this downward deceleration in inflation. You could have food prices pick up even more. You could have shelter costs pick up even more. I'm not saying that's going to happen, but it could potentially be that the quote-unquote politically motivated narrative would actually work inverse. That's my thoughts. But we'll see. Cole says gas is coming down, but food prices are still high. Generally speaking, that's correct. I mean, crude oil, as we reviewed, and we'll get the exact print right now. If we look at futures, ticker symbol CL. And then I want to cover one more thing tonight, because I read a really, really good article. Right now, so light crude futures is 69.60 on the print. 69.60. and it's come down materially. This building is Jeffries, right across the street, East 53rd Street and Madison Avenue. This is another boutique investment bank. Rich Handler is the CEO, super smart guy. Love the building too. But if you look at the chart of crude oil, look at that massive blow off top there in 2022. I believe it was March of 2022. Crude got as high as $130 a barrel. We've completely collapsed, and actually looks like it may go lower. Oftentimes, we can use commodities prices themselves as leading economic indicators. So, assuming that crude continues this downward trajectory, what does that say about, global manufacturing demand, right? Abroad, in China, in the Eurozone, and in the United States. You can kind of use that as a little bit of a gauge. But if you look at food, if you ever been to a grocery store recently, maybe my perception is a little bit skewed because I go to the grocery store in Miami, Florida, and I go to the grocery store here in New York City. There was some recent data that came out about Miami that says the inflation rate in Miami, Florida is higher than the national average, which is very bad news. So if you're kind of someone that's complaining about inflation overall, what's happening in Miami with the inflation, it's printing much higher than the national average. And I think that's for a multitude of factors.
Later, guys, have fun.
Hey, Jen Claus, what's going on? Thanks so much for joining us. Austin city limits is it should stay below $3. $3 a gallon for gas. Libby Hicks says, yep, electric vehicles keeping oil prices low. I don't know if there's a super strong correlation there, but it's interesting to think about. Darren Thorne says, my dad was looking at his receipt for groceries, and he says that they've only gone up 1.5% in the past 5 years. That's pretty impressive calculation. And what part of the country? Because mine has definitely gone up way more than that. Particularly eating out at restaurants too. Let me catch up on some of the comments here. Yeah, Libby says gas coming down because production is slowing, not great signage. Again, that's using commodities prices as a leading economic indicator, which is wise, for sure. So there was this interesting article, and this kind of plays into our discussion regarding interest rates tonight. I believe the article was from Bloomberg, and it touches on the bifurcated economy we have. And we've talked about this before, but they were specifically referencing in the article Dollar General and some of those lower Dollar Tree type chains and stores. Hey, we got Trade Brigade back. What's up, Trade Brigade? I'm sure, busy day today, right? Huge 50 basis point cut. We were just kind of discussing it. I think they went too big, but that's just my opinion. And I really liked your tweet. Let's actually pull up Trade Brigade's tweet. I was laughing about this at the office today. The 2008 comparisons. Let me see, Trade Brigade. Wish my phone would work. But yeah, there was this Bloomberg article that came out referencing a lot of the things we've been talking about with margin compression at dollar stores like Dollar General, Dollar Tree. And a lot of these CEOs are coming on these earnings calls and saying, look, costs are up for us and overall revenues are down. But if you look on the other side of the spectrum, right, if you look at LVMH, Moet Hennessy, and some of these other luxury retailers and luxury hospitality companies like Hyatt, right? Hyatt is more of a luxury hotel chain with the Park Hyatt being their flagship brand and the Andaz. If you look at a stock chart of Hyatt, ticker symbol H, It's trading near all-time record highs. While the dollar stores, the Dollar Trees, Dollar Generals, etc., they're getting hammered. And what a lot of CEOs are saying is that the top 10% of Americans, or the top 10% even globally, are really carrying this economy. So the wealthy are spending, the wealthy are traveling, the wealthy are going out on vacations, while the bottom rung of society, right, the lower class and even the lower middle class are, for lack of a better term, are really getting called out, and they're not doing well. And you could also see this in credit card transactions, where some of the other credit card issuers like American Express, they're doing really well because they cater to more higher upper echelon clients. So it's really a bifurcated economy. That should be kept in mind as we're thinking about, an investment thesis or which specific sectors to invest in. And even if you're going to start a business in your own life, maybe it's wise to cater your products and services to a specific subsegment of the market, right? To expand your TAM, because right now the lower and middle class is not doing well in America, and that's not just my opinion, that's what's showing up in the data, specifically from a lot of these earnings reports from Dollar Store or Dollar Tree and the like. Hey, Action Kid, what's going on? Says, Tom, I've noticed this for sure. The country's economy is divided into the haves and have-nots. It seems to be that way, Action Kid, and we've had this discussion once before. Oh, look what's going on over here. I think there's a big event at the United Nations, perhaps, and maybe they're doing some fundraiser here at the Met. Something's going on. But what I believe that has caused all this, right? Oftentimes what I refer to as the two-tier society has really been the Federal Reserve, right? And this is not to dump on Fed Chair Jerome Powell. This has been happening way before him. But this really started in 2008, right during the Occupy Wall Street protests. Because to get us out of the financial crisis, the Federal Reserve adopted a policy of ZIRP, or zero interest rate policy, to flood the system with liquidity, to get the economy moving again. The problem is, who had access to that liquidity? That's kind of the most important thing. Not average everyday Americans like me and you, it was the top wealthy 1%, corporations that were able to borrow money in perpetuity, right, to grow their businesses, right, number one, so it's not all bad. But number two, to accumulate assets. And as the Fed left interest rates too low for too long, nearly a decade of ZIRP, that caused significant inflation. Maybe not inflation as it relates to the CPI, Consumer Price Index, but it really created asset price inflation, right? Inflated the prices of housing, multifamily real estate, single-family real estate, stocks, equities. And if you look at the breakdown of the proportion of Americans who own assets, like equities, stocks, real estate, the top 10% of Americans own 90% of all the assets. So I think that's really what's created this huge divide. There's a massive two-tier society where you have people like Jeff Bezos. I think he just bought like an $85 million private jet. Like crazy wealth on the top end. And then everyone else is really getting called out. And you don't have much of a middle class. And we're starting to see this in a lot of the corporate earnings reports. Not to repeat myself, but I think it's important. Listen to the CEO of a lot of the dollar stores. He's saying, look, we're not only having to kind of cut back on our staff, we're having to close stores altogether just because revenues are down significantly. So it's interesting. Trade Brigades says, wish I was a bit older in the great financial crisis to get in on that. Was too busy drawing with crayons back then. Same here, man, same here. I feel as if you were like 20, maybe 25, right at the depths of the 08, 09 crisis, there was amazing opportunities to buy assets at bottom of the basement prices. Now, Trade Brigade, I'm not sure if you've seen this interview. It's actually one of the more famous interviews with Warren Buffett. I forget who the interview was with or who was interviewing Buffett, but this was during the time of the great financial crisis, and he asked Warren Buffett, he's like, if you could do, one investment, pick one investment for the next decade, what would it be? And I believe Buffett said, if I had the capacity, I'd buy all the single-family homes. I'd buy a huge basket of single-family homes and hold them for the next decade. But he's like, I won't do that just because Berkshire doesn't have the capacity and the wherewithal to do that. And he turned out to be so right. It's unfortunate because a lot of people who lost their homes during the financial crisis, I believe, were deceived by many people on Wall Street, many bankers. There was a lot of nefarious activity at play. It is of my view that many bankers did not advise their clients and educate them about adjustable rate mortgages, balloon payments, and they just wanted to get their bonuses and get their checks. So when the market fell out, guess who was there to swoop in and buy everything at bottom of the basement prices to then rent that real estate right back to us? Well, we all know who. Try to find that interview on YouTube. Just type in Warren Buffett single-family homes. That's a really, really good interview. This is the Steinway Tower, skinniest residential apartment building in the US. Peter says, Tom, it is also becoming a two-tiered society when it comes to education. The intellectual quality of students and graduates now is lower than prior generations. That is a whole other can of worms that we could get into, and I think you're correct. And you know what really, really exacerbated that cycle? The Big C. I won't say it so we don't get banned, but the Big C did more to help the wealthy and the rich and did more to punish the working poor than any other event since the great financial crisis. Because think about it like this, and maybe there's some educators in the audience, maybe there's some teachers, maybe there's some professors. Great grab by that guy, fantastic grab with that cab. During COVID, right, you have to think about the United States as a whole. There is a lot of students that go home each night and they do not have access to the internet at home. Their parents do not make enough money to afford childcare. So when they're at work all day, they send their kids to school and that acts as the babysitter. But if you force that remote schooling, now the poor kids don't have access to the internet to complete the schooling. They don't have the childcare, so someone could actually force them to do the schooling. But the rich kids, they have a 5-bedroom house, they have peace and quiet, they have no distractions, they have internet, they have all the tools in the world to get their schooling done. So that really, really broadens the divide. It's going to be interesting to see some of the data that comes out over the next 5 years in just how the Big C impacted a lot of, students from lower socioeconomic status. I think it's going to be quite crazy. Professor Dario says the same happened here, Tom, referring to Argentina. Yeah, and I never really thought about that before, right? Because I come from, middle-class background. I never had to worry about food. I never had to worry about, schooling or childcare or anything like that. We weren't rich, but, we had internet, right? I never had to experience something like COVID. But if you think about a lot of the students from the inner cities, they go home and they don't even have a computer at home to do the remote schooling. And during COVID, I was a director of sales for a tech company where we did a lot of these deals, right? We got a lot of government contracts to help bridge that digital divide. And I would be on calls with guidance counselors at schools saying, we have about 500 to 600 kids within our district that do not even have computers at home to do the work, let alone an internet connection. So that's a very good point by Peter. Professor Dario says, moreover, many families only have a cell phone to follow the classes. That's crazy. Seems pretty impossible to do work on a cell phone. Kristen S. says, Tom, there's also far too many parents and students who don't think what's going on in their classroom is worth their time. Lots of minimal effort to learn. Timothy James says, Tom, some of the disparity in internet access is by choice, not financially driven. Interesting. I don't know about that, but interesting. I'll think about that. Storm Riders says, enrollments dropped dramatically after lockdowns ended. Where did those kids go? That's a good question. I notice when I'm out during the middle of the day, and this is totally anecdotal data, by the way, so take this with a significant grain of salt. But I'll be out, running back and forth between a client or something like that. It'll be 11 o'clock, maybe 1 o'clock in the afternoon. And there's all, high school aged kids just roaming about, taking the subways. And it never really occurred to me before to think about it, but shouldn't they be in school like 11 o'clock? Anyway. But it's interesting. So again, the main topic of discussion for tonight was the FOMC meeting. If you're just joining us, Fed Chair Jerome Powell did cut the Fed funds rate by 50 basis points. So the question is, where are asset prices going to go from here? Is the market headed higher over the next 6 to 12 months, or is it headed lower? I still got to pull up Trade Brigade's tweet because I think this is a very useful tweet. Here it is. So if you have an X account, formerly known as Twitter, and you want to follow, if you want a good follow, check out the Trade Brigade. And the tweet says, are you ready for the 2008 first cut / crash comparison charts tonight? I can assure you there won't be one in the midweek video. And essentially what he's referring to is, if you think about the last time when the Fed went this big and cut when the market was trading near all-time record highs, it was just before the bottom fell out of the market that led to the 2008 financial crisis. I don't know if you can make that comparison. Personally, I think it's a very, very different economy. I think there's a myriad of different factors that are at play. If you think of the main factor that was at play that kind of caused the great financial crisis, it was all these subprime loans that were out, right? No credit check, no income verification, just getting as many people as you could into homes with adjustable rate mortgages, right? So when you had that balloon payment, you had massive, massive defaults on all these people who couldn't pay, subprime. There was a data point that came out 2 days ago. I think this was a tweet from Bloomberg. I'll try to pull it up. But we just hit a new all-time record high. So I think it's 46% of Americans that own a home have no mortgage, zero balance. They have 100% equity in their home. Why do I bring that up? Well, it's kind of hard to default on something if you don't have any debt. But nobody really talks about that, right? They just kind of want to push the fear and the doom and the gloom. But I believe it's over 46% of people have no mortgage outstanding. They own 100% of their home free and clear. And I also believe that's another reason why the real estate market, generally speaking, has had valuations stay relatively high, even though we had significant interest rate hikes over the last 24 months. Any thoughts there? Comments? This is a good shot of the old Carnegie Deli that is now all blown out, unfortunately. Alexandria's here. I see Joseph Hardaway. What's up? Isaac says that's great. China is at around 80%. We're getting there. 80% in what? Maybe I missed it. Loss not yet found, since I thought we would get 25 basis points in a flat market, 50 basis points in flat market. Yeah, I was pretty surprised at the 50 basis point cut as well. Jimmy said at the time, if you had a pulse, you were qualified for a mortgage. True. Now, to Jimmy's point, that's actually one of the positive things that came out of the great financial crisis. Now, it's kind of hard to say positive. Many of you are thinking, how could you say anything positive came out of it? You know, millions of Americans lost their homes and became homeless and lost everything. Well, kind of looking on the more optimistic front, underwriting standards across Wall Street got significantly better, right? That's also a very, very good point. Kind of as a preventative measure to say, hey, let's be proactive here and make sure nothing like this ever happens again. So chances are, if you bought a home and you needed debt, like a mortgage, like I have a mortgage on my house, the underwriting was probably quite strict. Like I remember for me, they wouldn't even give me the money. I had to put 20% down. You know, and I had a lot of cash in the bank. I made, you know, I had a very, very good income. But the lender was like, your credit history, you don't have enough credit history. That was a big mistake that I made. So for all those youngins out there who are watching, I was really late to the game in getting a credit card because I tried to be like super financially savvy. I listened to Dave Ramsey. Don't listen to him. Get a credit card as soon as possible, but don't be reckless with it. Put $100 on it, put $200 on it, and just pay it off every month, because that will build your credit. Even if you have a lot of money, right? And you want to participate in this capitalistic game in the United States and buy companies and buy houses, buy investment properties, you're going to need debt, and banks are not going to give you debt unless you have a credit history, okay? And unless you have millions of dollars, you probably can't float all the cash. In any event, so my bank, my lender, said, we're not going to give you the money unless you put 20% down. So there's a lot of people that do have mortgages, but they've made very, very big down payments. So that is used as a hedge as well. We're now outside of Carnegie Hall, looking up at 157 West 57th Street. This is an amazing shot of 157. Brad's brain says, Tom, I bought my first home in 2008. I couldn't comprehend ARMs. I saw the absurdity, but I did take advantage of easy credit and took out a standard 30-year. Well, that's good. Yeah, I mean, to Brad's point, right? And this is my opinion, but there's been many interviews, it's been widely documented. They've even had some bankers had to, testify under oath in front of Congress. Many bankers to first-time home buyers that may not be the most educated first-time home buyer, they were not told the truth. If anything, they were misled and not fully understanding the products that they were getting themselves into, such as an adjustable rate mortgage. They didn't understand the balloon payment concept. So I do believe that. I do believe that there was many nefarious actors that were deceiving their customers and not educating them on their products. I mean, it's almost proven because the whole economy crashed. I mean, you can't have that many people that are just super incompetent. There must be some form of negligence there, in my opinion. Yeah, Jimmy B says, and huge points, that too. Storm Riders has bought my current home in 2008 when comps plummeted, 3x appreciation since then. Wow, God bless. God bless. NBA Elias says, it's amazing to me how even when markets get what they seemingly want, they immediately want more, referring to the 50 basis point rate cut. Sam Oliver says, Tom, you avoided PMI. I did avoid PMI, but to me, I'm renting out the property. So to me, I wanted to put like 10% down and like leverage out a little bit more, and my interest rate's really low. I think it's like 3%. Look at all the dogs here. Yikes. Trade Brigades. This Tom, there's a great Netflix documentary on the legal side of 2008. Speaking of Netflix, flagging near all-time highs. Trade Brigade, let me take a screenshot of that. I don't Netflix. I'm not a Netflix customer, but I am watching that stock. It is trading near all-time record highs. And I will check out the documentary. Do you know what the documentary is called, by the way? Vincent C says, Tom, I bought a home on Long Island in 2023 and got lucky with a 5.5% interest rate. Very nice. We're on Long Island. I am from Massapequa, so maybe we are neighbors, potentially. Trade Brigades is looking for the name standing by. Thank you, sir. John says, Tom bought a house in 1985, had a 17.5% mortgage, refinanced in 1989, 11%, paid off in 1999, free and clear. Wow. Well, God bless. That's fantastic. Also back then, I'm guessing homes weren't, $500,000 to $600,000, $700,000 for a starter home. Now, why is the housing conversation also important? Well, again, if you look at the data, and this is taking out the net worth of the top 10% of Americans. So if you take out the top 10% of people in the United States in terms of wealth and net worth, the bottom 90% have the vast majority of their net worth, right? So their nest egg for retirement, in the equity in their homes. We'll go up one more. Too much scaffolding. I don't want to walk under scaffolding. So why is this a problem? Well, as it's been talked about in a lot of the political conversation as well, buying a piece of property, whether it's a single family home, duplex, triplex, whatever it is, right, seems to be unattainable for a lot of younger individuals in this country for a multitude of reasons, right? Most people, unless they're really lucky, they have to get help from their parents for like a down payment, unless they get lucky and get like a really good job and saves like so aggressively. But for most people, home ownership is really out of the question. And you have more renters than ever before. You could say the United States is turning into a renter nation. The problem in here lies that if that data point is correct, which it is, that most Americans have their net worth tied up in their homes, and if the younger generation can't afford to buy those homes, well, how are they going to build any sort of wealth for themselves for retirement? It's going to be increasingly harder as asset prices run away from them. So that's also something to look at. Trade Brigades, the documentary is called Inside Job, narrated by Matt Damon. Really? I'm going to check it out. I'm going to check that documentary out. I'll have to probably buy Netflix just for that. Cole says prices here in 2000 were around $200,000. Now the same house is around $400,000. Crazy. In some markets, prices have 4x, 5x, like in Miami, some of the suburbs around Connecticut. So some of the suburbs in Long Island really have gone up in a crazy way. This is the front of 220 Central Park South. This is where Ken Griffin owns a really nice duplex here. This is one of the most expensive pieces of real estate in New York City, right here at 220 Central Park South. Brad's Brains is the equity in your parents' home will one day be yours, though, in many cases. That's true. I was also reading an article that says this generation, Gen Z, right, is set to inherit more wealth than any generation in history. But if you really get granular on that data, right, that sounds great, right? That sounds fantastic. However, it's very bifurcated, kind of like what we talked about. It's the rich kids are set to inherit a ridiculous amount of wealth. This is Maria. This is a great restaurant. So that's really going to exacerbate the wealth divide even more. But generally speaking, you're correct. It looks like Maria is packed tonight. Speaking of the wealthy doing very good. Not an empty seat in the house. And if you take a look at Trump International Hotel and Tower, this hotel right here, which is fantastic, by the way. This is one of my favorite hotels in the city. It goes from the first floor to the 16th floor. That's the hotel, and it looks like almost every single room is filled. If you look at, let's look at how much a night costs at the Trump Hotel.
Why do you slow down for me?
Trump International Hotel and Tower. Let's see how much a night is going for tonight. Anyone want to guess? I think that would be an interesting guess. What is, if you wanted to stay at the Trump Hotel tonight, how much do you think it is per night? We'll get a better shot here. Someone says 700, lost not yet found says 500. Good guesses. Hey, what's up? Good to see you. Jimmy says 1,200. Jamie says 750, 400, 500. These are pretty good guesses. Darren, 1,000. Professor says 500. All right, I'll give you the answer. So here it is. The Trump International Hotel and Tower in New York. You're looking at $1,200 for the night. On the Trump website, $1,200 for one night. And it looks like every single room is occupied from the way the lights are on. And I bet if you check the Park Hyatt, I bet if you check the JW Marriott Essex House, the Equinox Hotel, what others? The Lotte, New York Palace. I think they're all occupied. The tourist activity this year, headed into the fall and the holiday season, is probably going to be the highest it's ever been. And the prices are also going to be the highest it's ever been. So that just goes to kind of prove our point, even though the data is a little bit anecdotal, that the wealthy people seem to be spending money and doing great. I mean, if they can afford $1,200 a night, I mean, I can't afford $1,200 a night. Hey, Diana, thank you so much for your very generous $10 donation. This is Tom, as a fellow New Yorker who was born in New York City. I really enjoy watching. Born here in 1945, so I have seen a big change. Wow. Well, Diana, thank you so much for the support. I'd like to ask you a question. Since you've pretty much seen the city evolve, what do you think the biggest change is in Manhattan since you've been growing up? So out of the culture, out of the real estate, out of every single aspect, out of the public transit, out of the public parks, what's the biggest change you think that you've seen? Is that a helicopter? Looks like we got an NYPD helicopter circling Deutsche Bank Tower. It's a very active night. Alan says, did you have a question for me, Tom? I did. Thank you for reminding me. Now, for those of you who don't know, Alan is kind of our automotive expert. He works in the auto industry, really knows the ins and outs of the industry. Something which, you know, as a New Yorker, I don't drive, so I don't really know too much about it. Being that the Fed cut interest rates by 50 basis points today. Now, it may not automatically reflect in the lending rates immediately, but you know, the general trajectory is that interest rates are coming down. Do you think that you're going to be busier, significantly busier, as in terms of people purchasing new vehicles, getting new leases, and your buyers that need financing, do you think this is going to be a big game changer for them, or kind of what are your thoughts? Because I remember last time we spoke, that was kind of gauging you for demand, and you said, look, I'm talking to a lot of customers right now, and they say that we want to buy, but interest rates are just too high. So is this going to cause a wave 2 of demand to bid up prices again? That's my question. Hey, Ukrainian Royal, it's good to see you. Thank you so much for your generous $5 donation. It's nice to see you all again. It's been hot here in far northern New York. Last time I was in Manhattan was in late August. I hope you're doing well, Tom. Thank you so much, Ukrainian Royal, for your generous $5 donation, and I hope you're doing fantastic as well. Hopefully you had a good summer. And thanks so much for joining us. I see Latha. What's up, Latha? Always a pleasure to have you here with us. Alan says, Tom, over the next 90 days, yes, I feel confident we will see an uptick. That was the biggest drawback. Buy now and pay 8 to 9%, or wait a little and pay less. Over the course of the loan, it's thousands for 2 and 3%. So you think you're going to see a big, significant wave of demand? I mean, if for anyone who is in sales today that sells, expensive products that usually needs financing, I'm sure many sales reps were hitting the phones today, calling their customers, calling their clients, educating them on the Fed's decision today. Because you'd be surprised, not a lot of people follow this stuff, kind of like we follow it, right? We follow it here because we talk about it every night, but most people, right, and this isn't like a knock towards anybody, right? Most people don't even know what happened today with interest rates, with the Fed. We're kind of in our little bubble, right? It may seem commonplace to us because we walk around the city and talk about it every day, but to most people, they didn't hear about this today. Alan says, Tom, Monday we will be sending out mailers and emails advertising new lower rates. Hopefully you get some business. Hopefully you close some deals. Keep us posted. It's going to be interesting to gauge demand. This is one of my favorite shots in New York City's Billionaires Row. Stunning. Now, if you guys are enjoying the live broadcast tonight, feel free to leave a like on the video and click the subscribe button if you're new. We usually do these broadcasts every day starting at 8:45, and we would love to have you join us. Now, I'm going to zoom in on 157 because it looks like Michael Dell is home. So Michael Dell owns the top duplex at 157, and I think the bedrooms are in the back, so it looks like the light in his room is on. And then below Michael Dell, I think, is Ackman. Bill Ackman has his place. Alan says, will do. I appreciate you thinking about me when the news broke. I'm eager to see what happens. Yeah, keep us posted. It's always good to kind of get a feeler on different industries. I could tell you, being in the real estate industry, I've seen a significant uptick in activity. You're starting to see buyers put in offers on places. Tug Carter says, Tom, will your newsletter be out tomorrow? Yes. So I do apologize for last Thursday. For those of you who do read our free investing newsletter, it's supposed to go out every other Thursday. I had to miss last Thursday, which I apologize for, but I was dealing with a lot of craziness in Miami. I had to move tenants into my house, and right as the tenants moved in, the construction crew that was doing some work in the backyard severed my water line in half, causing a massive flood, not inside my house, but outside. I had to have the city come and replace the pipe, and when they turned on the water way too fast, and I have an old house. My house is from 1955, so I have a cast iron main line. So when there's no pressure, when there's no water pressure in your main line, the problem is all of that rust settles to the bottom. So you have to turn the water on extremely slowly or all of that rust is gonna blow right in all of your water lines and clog it, and that's exactly what happened. So I had to get a plumber there. I didn't have water for 2 days. My tenants were complaining, so I didn't have time to write the newsletter, but it will be out tomorrow. So go to our Substack. If you're not signed up for it and you wanna read all of our equity research every other Thursday, you can just type !news, NEWS in the chat, and check out our Substack. This is what it looks like. So if you go to our Substack, the Behind the Street newsletter, financial markets are complex. We break it down and keep you informed in under 15 minutes, my friends. Also, we have over 5,000 readers, which I really appreciate. So thank you guys for reading my work. It does mean a lot. 5,000 readers is crazy to me that every time I send out a newsletter, 5,000 people get it. Your time is valuable, your time is important, so allocating a little bit to read my work means a lot. So thank you for that. Yeah, thanks a lot. This is the Mandarin Oriental. Speaking in Miami, on the island of Brickell Key, which is just off of downtown Miami in Brickell, you have the Mandarin Oriental Brickell Key. Now, the hotel was built in 2008. They're tearing it down, but first they have to build the brand new Mandarin Oriental Residences Tower on the island of Brickell Key, and it's gonna be crazy. I was at the showroom, I got a tour around the showroom, it was fantastic. So once that tower goes up on Brickell Key, they're gonna do a total demolition on the hotel at the Mandarin Oriental. Should be pretty cool. Hey, Clarence, his Redfin and Zillow stocks have been doing well lately. What's up, Clarence? And you know what I also noticed? Some of the brokers, right, the brokerages like Compass, I think is like the main one. Let's actually pull up those charts, because that's a good point by Clarence, because a lot of times we can use stock prices in and of themselves as leading economic indicators, and the interest rate market. Oh, the dog was chewing on a roach, I think. And we can use the real estate market is very rate sensitive, right? Anyone who's been selling residential real estate or even commercial real estate has been having a very, very tough 2 years. Transaction volume has fallen off a cliff. There's no deals being done. So if you look at, I think the ticker symbol for Compass is CONP. So check this out, everyone, okay? I'm not sure if everyone's probably heard of Compass. So look at the stock price, right? They IPO'd in 2021, which makes sense. That was when everything was in euphoria. Then the stock got absolutely hammered. What's the correlation there? Massive interest rate hikes. And now you're starting to see all the brokers, real estate brokerages, actually do well. So the stock prices is telling you something, right? The stock price is leading the market. And what was the big catalyst we got today? The Federal Reserve cutting interest rates by 50 basis points. Generally speaking, as those interest rates come down, deal flow picks up, not necessarily valuations go up, but transactions get done. Brokers get paid when transactions get done. So that's a very interesting point by Clarence, spot on. Redfin, Zillow, Compass, I think Element. What's the ticker symbol for Element? DOUG. All have been catching a pretty nice bid. Now, we're not saying buy any of these, right? But you can kind of use if whatever stocks are doing well, if you factor in that the market is forward looking by 6 months, right? The market looks out 6 months. Well, then maybe you're going to see a pickup in deal flow. So it's a good point. This is Fordham University here to the right. I think this is the graduate school campus or the law school campus, I think. And then looking up is Lincoln Center. Let's continue to walk east. We never really go over, or west. We never really go this far west. If we go over one more avenue, this is going to be CUNY John Jay College. This is my alma mater right here to the left. John Doe says, how's the weather? Not bad. Not bad. It's kind of moderate, kind of cool out tonight. Hey, Trade Brigades, I love your reminder that it's leading because of order of liquidity. Oh, for sure, yeah. Absolutely. Easier to transact with stock versus real estate. Absolutely. Look, hopefully transaction volume will pick up. More deals will get done. And I think more deals will get done at lower prices. Because many people are kind of willing to throw in the towel, so to speak, and they need to move their product. But in order to move it, you got to cut the price. Ghana says, Tom, are you a CFA? I am not a CFA. Not smart enough for all that big stuff. Tomahawk says the reduction today was a little higher than expected. Buyers will probably wait expecting another cut. Potentially, but you know what's interesting? And we reviewed this. I'm glad that you said that, Tomahawk. Here's the interesting thing. We did review this at the beginning of the broadcast, but I think we have newer viewers that just came in. I'm going to show you this tweet by a good friend of mine, Dan Tappiaro. So if you have an X account, we'll just review this one more time. This is a very good account to follow. Dan Tappiaro. Now, he is the CEO and founder, managing partner of 10T Partners. He got his start on Wall Street working under Stan Druckenmiller, one of the greatest investors of all time. And this is kind of what he says about interest rates, and it's very, very true. So check out this tweet. It says, for those of you who don't follow forward financial indicators, be aware that the market's already pricing June of 2025 Fed funds at 3.1% and December 2025 Fed funds at 2.8%. So again, the market is really already priced in these cuts. That's why I say, if let's say if you're you're shopping to get a mortgage or something right now, over the next 2 to 3 weeks, will the print on your quote come down substantially? Probably not super substantially. It'll probably come down a little bit. But most likely you'll probably get your average 30-year fixed in the low sixes, maybe high fives. If you have a good credit score, maybe if you're moving cash from one bank to another, maybe you can get like 5.5%, which is historically very, very low. But the market, again, looking forward 6 months, has kind of already predicted these rate cuts. And I agree with you that we'll probably get more. I don't think that's what should happen. I kind of disagree with the Fed here, but, what can we do? All right, everyone, this is where we really never go. This is West 60th Street and Amsterdam Avenue. This is where I went to school, right here, in this dilapidated looking building. Now, this is no longer, John Jay College no longer owns this building. This was called North Hall. Oh, look at this. They put scaffolding up again at the college. When I started as a freshman here, this building looked so beautiful. And you can see what I'm talking about here in a second. The first day, my freshman year, they put up scaffolding. They took it down my last year, senior year, and now it looks like they put it up again. But this is a 4-year college in the CUNY system. for those non-New Yorkers, CUNY stands for City University of New York. It's public school, so most people who go to CUNY are from New York because you get a discount if you're a New Yorker. So I think when I went here, the tuition was like $2,500 to $3,000 a semester. It was good. It was pretty decent. Now they built a brand new building called the T building all the way in the back. And these are where all the forensic science labs are. And I think the NYPD actually may use some of the labs here. So John Jay College of Criminal Justice, hence the name, used to be an all cop college for the NYPD. So it used to be all males, and everyone who used to go here would go right into the New York City Police Department. Now it still has a very heavy criminal justice focus. It's a big feeder institution into the NYPD, FBI, CIA. That's the route that I kind of wanted to go to, but chose a completely different route. We'll just do a quick kind of walking tour around the campus so you can see the newer building. Kyle says, what did I study there? I did criminal justice and economics. So I took a lot of forensic accounting classes. So forensic accounting, depending on like what the specialty is, it was like a lot of scrutiny of like balance sheets, how to identify abnormalities in financial transactions to kind of prevent money laundering. So sometimes, kids who graduate here with the forensic accounting specialty work at a lot of the big banks to kind of do that stuff. This is the computer room, or at least it was the computer lab when I was here. Now, I used to sit in the corner and just binge watch just the most ridiculous Peter Schiff podcasts you could imagine, right here. I would be watching Peter Schiff. Oh, that's right. Professor Dario is a professor of neuroscience, I believe. Neuroscience professor, and I think you may be teaching here pretty soon. I may have to re-enroll if you're going to teach maybe in the forensic psychology department. That'd be pretty cool. Maybe I'll have to re-enroll. What a trip that would be. Now there's a pool in here too. You can't see it because all the shades are down. Richard says, why did you change directions? To be very blunt, money. The money in the private sector is a lot better than the public sector, just in full, honesty. You can't really, in New York City, it's very expensive to live here, and if you're in the NYPD, the first 2 years you're making like $45,000. You can't even afford to eat. That's just my honest, no frills answer. That's really the honest answer. It's too bad that they put all the blinds down. I wanted to show you what some of the classrooms look like. Anyway, speaking of New York City real estate, you see all these beautiful condos right here? When I was going to college here, none of this used to be like this. Okay, 11th Avenue was not the best place in New York. So to see these very expensive luxury condos all up and down West End Avenue, look at them all. These are all brand new, very, very expensive condos. This is one West End. This did not used to be like this. This was it wasn't a dangerous neighborhood at all, but it wasn't nice. Let's just say that. Again, not dangerous, but it wasn't nice. You would never expect to pay $10,000 in rent on West End Avenue on 59th Street. We might as well go to the Hudson River since we're here. So this is the college of the new building. You can kind of see the John Jay logo across. It's really, really nice if you're lucky enough to get classes in the newer building. Again, this is where much of the forensic science labs are, in the new building. But let's go and check out some of these new developments, because I haven't even really walked these much. But what do you guys think? These condos look very nice. Right here looks like a big library or maybe a gym for the residents. Hey, Hang with Mark Mom is here. What's up? Thanks so much for joining us. And yeah, it's pretty wild. We have about 56,000 people now here, which I appreciate very much. That's a beautiful lobby. Look at that. Wow. One more look at John Jay College here. Professor, if you get that job at John Jay, I'll have to give you a tour. I'll show you around the campus. Wow, there's a Morton Williams, brand new Morton Williams here. Nice bar too. Yeah, this was not like this when I was going to school. The problem is, though, it's so far away. You're about a 10 to 15 minute walk from the train. The closest train from here is 59th Street, Columbus Circle. That's a little bit of a hike. Not super far, but far enough. Oh, that's right. I forgot to read some of those comments. I think multiple people were pointing out the fact that they're looking to move some of their money out of high yield savings accounts because interest rates are coming down. Which begs the question, there's also another interesting fact that we need to take into consideration here. I mean, look at these condos. These things are sick. These are all brand new. So as interest rates come down, right? If you guys navigate over to the St. Louis Fed website, right? St. Louis Federal Reserve's website, and go ahead and look at balances in money market accounts. About 2 months ago, we hit a new all-time record high for essentially cash that is just sitting on the sidelines collecting high interest in money market accounts. I believe there's over $6.2 trillion of cash sitting on the sidelines in money market accounts. Here's the question. The question is, when interest rates come down and those people who are stocking away $6.2 trillion in money market accounts collecting 5% interest, when that goes back down to 3% and now they're not getting a real rate of return on their money, where's that money going to go? I mean, it's not going to go to money heaven. I mean, people are not going to accept a negative return. I think it's going to go into assets. I think it's going to go into equities. I think it's going to go into real estate. I think you're going to see round 2 of a venture capital and private equity bubble. Things could get crazy. Things could get a little crazy. MBA Alliance, those funds are headed towards real estate and equities. I agree with you. And I'm sure Chamath will probably raise another fund and launch another 10 to 20 SPACs that are allegedly frauds. Man, these are really, really nice.
All right, goodbye.
Condos. Brad's brains is money heaven. That's where I want to go. You and me both. All right, let's get a quick, what are you guys' thoughts about these new developments here? It's almost like a mini suburb out here on the Hudson River. Hang with Mark Mom says 3 to 5% interest rates are a joke for sure. I'm into real estate and the S&P. I'm actually really liking it over here, but I'm not going to fall for the trap because living over here in the winter is beyond brutal. Beyond brutal. It's so windy and cold over here. I mean, you can't even enjoy it. But in the summer, like right now, this place is like the best. Brad's brains is not a fan. It looks like something in a Russian city that's not up to code. It's very futuristic looking. I'm not a huge fan of the angular architecture. That's why, many of you kind of, we butt heads when I say I'm not a huge fan of 53 West 53rd Street. Just because it's too angular. I don't think that lasts over time. But it's kind of cool. Let's continue to walk through this little park here. And this will bring us directly to the West Side Highway. But if you guys are enjoying the live stream tonight, feel free to leave a like on the video and click the subscribe button if you're new. Up here, this is where, I don't think it's the Trump buildings anymore, but Trump was licensing his name on a lot of these developments on the West Side Highway. I think originally he built all of these deals and then he converted it into a licensing agreement or something. I don't know if that's exactly what happened. Maybe somebody in the audience knows, but Trump was really the one who started this trend, right, whether you like him or not, of developing the West Side Highway, Riverside Drive. Hey, New England Crypto, thank you for watching. I'm actually going to send you this tweet, by the way, right now, New England Crypto. How do I do that? Share. I just sent it to you. This is a good guy to follow, too. Hey, DM, what's up? This is the buildings used his name. Got it. I don't think so anymore, right? Did they take the name down? Something like that? These are really nice apartments. You can't really see it because it's blocked off by this construction fence. But you're overlooking the Hudson River, so you get really nice sunsets. Oh wow, Darren says I watch your show on a giant screen in my house and chat with you on the phone. It's the best way to do it. Well, thank you very much. I I wonder how the live stream looks on a TV, like a big HD TV. Probably look even better in 10 years when we could stream in 4K. Hey, what's up, Triple G? All right, let's cross here. Very quiet up here, too. Hey, Ike Voorhees. As I tell you, New York City is much better compared to the 1980s. Agreed. I wasn't there to experience it, but I agree. Although today I probably witnessed the most brutal subway incident of my history to date. It was a very, very scary situation today on the subway, and it's always on the 6 train. Every time it's on the 6 train. I think it's because the Green Line runs you all the way to East Harlem, and there's some rough parts of East Harlem. That's why I always say I like the Upper West Side better than the Upper East Side. It's because, honestly, you know, past 96th Street, it's not good up there, okay? I don't care what anybody says, it's dangerous up there. On the east side, East Harlem, is not good. And every time I take the 6 train, or the Green Line, I have problems. It's always some crazy person that's threatening somebody. I witnessed a slashing. Literally, a guy comes on the train out of nowhere, takes a box cutter, slices the guy. So that's why I say the Upper West Side's a little bit better. Wow, this looks really nice. It's like a little wine bar here. But in any event, if I had to choose between the two, I would always choose the Upper West Side just because of the subway. Because I never have any problems on the 1 train, the 2 train, or the 3 train, never. But even if you live in a really nice townhome on the Upper East Side, you got to take the train. And for whatever reason, the craziest people I've ever witnessed in my life are on the 6 train, or the 5 or the 4. Anyway, I digress. Hey, Triple G's Tom, futures are green with the exception of crude and gold. 50 basis point cut might be promising for the short term. Well, they always say there's that old saying on Wall Street that the first move is the wrong move after FOMC meeting. So we'll see what happens. We'll see what happens. This is Riverside Park South. Now this is really nice over here. If it's open, I'll take you guys down. If you're visiting New York City and it's nice out, you gotta go directly where we are, but you gotta go down here. There's this little restaurant right under the bridge, right under the highway, overlooks the Hudson River. It's beautiful. Let me see if I can stand up on this bench just so you can see a little bit better. But you just go down these stairs and then you could walk out on this pier. It's really nice. And you're looking at the Hudson River. Hey, Jonathan from Florida. Thanks so much for watching. It's beautiful over here, right? It's clean, it's nice. It's quiet. You know, if you have pets, if you have dogs, or even if you have kids, these apartments are probably a good choice. Because this is like a whole private park to yourself. You know what? Since we're over here, we might as well go to the Hudson River. We have a limited number of nice weather days in the city. So we're going to go down these steps and we're going to check out the Riverwalk as well as the bike path where you could bike around the entire island of the city. I think I hear like a horse coming. I hear like clogs of a horse. But usually there's no Central Park horse carriages, guys. I wonder what this is going to be. Oh, it's headed right at us. Oh, it's headed right at the dog. Looks like it was the NYPD's mounted unit. That guy was really getting some ground in. So this is all brand new as well. This used to be under construction when I was going to college here. This is a running path, a biking path. There's new playgrounds, you have swings here. And no cars, by the way, too. So this bike path here will take you all the way down to the World Trade Center. It's the best biking path you could ever experience. The views are incredible. Western Mass, Dave. We're gonna get to the Staten Island Ferry. I think we'll probably save that for Sunday. And this is the Hudson River. And there's our friends over in New Jersey. Tug Carter says, Tom, do you not get nervous out this late when there's not that many folks out? I think I prefer it. I don't really like there being a lot of people out when I do the live stream. Wow, and the air smells so fresh because it's fall almost. Let's go ahead and walk on this half boardwalk thing. Man, this is so nice. Speaking of New England crypto, where's Bitcoin at right now? Let's see where gold is. Gold's at 2560. Bitcoin futures are at 62,000. We're up 3%. Hopefully, oh my gosh, where's this? Hopefully we break out of this handle here, which I think we will. Futures are 62, but this is probably a different contract that I should not be looking at. We'll look at the cash. Yeah, cash price 62,000. I think we just broke 62,000 on stream. Nice. Good stuff, good stuff. All right, I'll take you to this spot that I was talking about earlier, and then we'll turn around. But this is a really, really nice spot. The last time I was here, there was a restaurant. Looks like this pier may have collapsed. Now, a weird thing though in the news locally here in New York, there's been random bodies washing up in Brooklyn, like near Pier 5 where we were doing those broadcasts. They're just like random unidentifiable bodies. So there's that. Hey, Mark Davis from Toronto, Canada. Mark, maybe I'll be up by your way this winter. I'll text you if I get to Toronto this year. We'll have to meet up. Yeah, but this is the spot that I was talking about. This is a nice spot. You can park your bike here, hang out. This is that cafe/restaurant I was talking about. I have to come back here during the day and film a video so you guys can see what this is like. But this is gorgeous here because we only have about a month left. And then this place is going to be very cold and windy. Pier 1 Cafe. So you can come here, grab lunch or dinner, and you're right on the Hudson River. Riverside Park South Pier. So if anyone wants to mark this down on Google Maps, if you're visiting New York, I think that's your marker. Riverside Park South Pier, the Pier 1 Cafe. Let's walk to the end of the boardwalk since we're here. If it's clear, which it is clear tonight, we should be able to see the George Washington Bridge. I'll zoom up on it. Almost tripped. Yeah, we could see all the way to the George Washington Bridge. Look at this. I don't think it's going to come out well, but it is nice here. This is awesome here. Hey, Steve from Buffalo. What's up, Steve? We're finally checking out the Upper West Side. You can see UBS, you can see Hoboken, New Jersey. If we go out a little bit more, I think we'll be able to see the World Trade Center. There's George Washington Bridge again. What's the weather like in Buffalo right now? Is it getting cold for you guys yet or not yet? Usually Buffalo, the foliage starts much, much earlier than us here in downstate New York. That's one thing that's a must do as well. People think New York, they think New York City, but if you talk about New York, you also got to talk about upstate. And that has some of the best scenery for the fall. Wow, Steve says 85 today. It was hotter there than it was here. All right, this is kind of a cool view because amongst the skyline of the Upper West Side, you could see all of the Hudson Yards. So that big congregation of buildings there, that's Hudson Yards. Hustler says, Tom, how much would it take for you to jump in the in general or right now? Right now, like jumping right at this location, I think if I jumped in at this location, I'd swim over to this pier and kind of climb up there. I'd do it for 10. If someone had like 10 grand cash, I'd definitely do that for 10 grand. That's an easy swim over there. I'd do that for 10,000. I think anything less, it's a little bit too risky. Never know what can happen. Maybe I could underestimate the current, but 10,000, I think I'd do it. I think that's what I'd do. But if we go a little bit further out on the pier, I don't know. I think all the way at the end of the pier, I mean, that's a long swim. I'm going to really need to be, in the zone. I'm going to need to chug a Celsius or something. Let's see where that stock is. Celsius has been getting hammered. CHEL or CH. How can I forget the ticker symbol? Out here, I'd say 50. Ooh, I don't know. The water looks like it's moving quite fast. People underestimate the current. I'll say 75,000. Out here, 75. Over there, 10. Anyway, here you see great views. Billionaires Row, Central Park Tower, 220 Central Park South, 157, and the Steinway Tower. Yeah, Mark, I was in Korea. It was awesome. I got back maybe 3 weeks ago. It was fantastic. Someone says, hey, Tom, I just joined. You probably already went over the rate cuts, but what did you think about it? Yeah, we talked about it. We talked about it a lot tonight. Just my overall high-level opinion of it. I think the Fed went a little bit too big. I don't think they needed to do 50 basis points. Reason being, kind of what we discussed, it could potentially send the wrong message to the market. I mean, 50 is drastic. That could potentially say, hey, is our economy slowing? Is everything okay? Is there some sort of systemic crisis at a bank where we kind of need to do a quiet or silent bailout? I just think it's a little bit too much. Also, I think it could run the risk of a wave 2 of inflation. Right? Many people thought that today's actions by the Federal Reserve were politically motivated to benefit the Democrats, but I don't really understand how that would benefit because the number one issue with voters right now is inflation, and to provide a more stimulative economic environment would be to potentially run the risk of inflation reaccelerating, which would not be in favor. So I don't think it's politically driven. I don't know. I think it's time for the Fed to ease a little bit, and they could have just kind of either held steady at this one or cut 25 basis points. But at the end of the day, I don't know. I think it was more of perception because the market is already priced in these cuts anyway. Hey, Jonathan from Florida, thank you for joining. Appreciate it. See you tomorrow. A wonderful Thursday. Hey, Mark Davis is asking my thoughts on AI. Well, I think more broadly, a secondary question / problem is going to be, where are we going to get all this energy from to power these AI tools? And I think it's going to need to come from small cell nuclear reactors. And you're already seeing big data companies like cloud computing companies like Oracle. They're planning to build massive data centers with on-site small cell reactors. Mark, I'm going to email you an interesting article about this. So I think there's going to be really interesting investment opportunities in small cell nuclear reactors and just the data center business in general. Because I think one thing is for certain. Nobody knows how big AI is going to be, but it's going to get frothy and it's going to get a little bit crazy. So if you want to make money, right, or capitalize on an investment opportunity, the easiest way to do that is sell the shovels and the pickaxes, right? Not everyone made money, migrating to California in search of gold. But the people who made money were the people who were selling the shovels and the pickaxes. So in my view, the shovels and the pickaxes for this AI revolution is going to be the big infrastructure plays. You want to own the infrastructure that will provide the tools for the entrepreneurs to build the AI, right? So you probably want to be long, and this isn't advice, this is just us talking. You probably want to be long at least one of the big cloud computing companies. You want to have exposure to like an Amazon AWS, Google's Google Cloud, Microsoft's Azure, Oracle, or just pure play data center plays, like data center REITs, like an Equinix or something like that, or real estate investment trusts specifically that hunt for deals in the data center space. Also, what we've already seen has been a massive gain for us has been semiconductors, right? You're going to need these very advanced chips to run all this AI. And right now, the semiconductor sector is kind of cooling a little bit, but it's been one of the most outperforming sectors in the market for the last year. Chances are, if you were long pretty much any semiconductor stock besides Intel, because the company's horrible, you're feeling pretty well. You've done really, really well. So that's kind of my thoughts on it. This is quite a unique shot, right? What's up, Billy? This is Where Are We? This is the upper west side of Manhattan. We're right on the Hudson River. DJ says, Tom, would you invest in elder care because the population is aging? Yes, I think that's a huge opportunity. And I was in that space for a little bit, so I know a lot about that space. I know a lot about home health care, nursing homes, assisted living facilities. I know all about that business. Because I used to sell very, very expensive software and hardware into the largest hospitals in New York, the largest home health care providers and payers, and assisted living facilities. So I know the ins and outs of that industry, and the demand is going to be off the charts for home health care. For a few reasons, also assisted living, but most people, right, is a more affordable option. They would rather age in place with dignity in their homes and have like a home health aide come out to, administer medication, to do chores, to go shopping, to bathe to bathe the patient. So that's going to be huge. And what I would sell is a solution which pretty much automated that entire process. So if you think about how home health care was done before, and many of you may have personal experiences with this, you would have a home health aide come out to your house, and she would have to, or him or her, would have to manually register the amount of hours they clocked on physical timesheets. And then they would have to go to the office to turn in their timesheets to get paid. Well, there was two problems that was really, really wrong with that. On the other hand, every single thing that they did, if they administered medication, if they bathed the patient, if they went food shopping, whatever they did, they would have to keep a physical log of everything they did on physical paper. Now that opens up a HIPAA conundrum, because especially in a big city like New York, if these home health aides are taking the train, if they're taking a cab, what if they get robbed? What if they leave all the patient information on the train? That could open themselves up to massive liability and a massive breach in patient privacy. So we digitalized all that. So now, my biggest customers were Ultimate Care, nursing personnel, home care, Medova Care, who's a publicly traded company. MODV is the ticker symbol. That was my biggest client. And we essentially set them up on a fully digital automated system. So they would remotely clock in and out on a cell phone like this. When they would get to the patient's house, they would click clock in, and it wouldn't allow the aide to clock in if the GPS coordinates didn't match up with the patient's home. Because there was also a hefty amount of fraud. Let's say if a patient unfortunately had dementia or something and they couldn't remember. Some of these aides, I'm not saying all, there was a few rogue actors that would say they would show up and provided care to the patient, but they never showed up, and there would be no way to check because the patient was either mentally or cognitively impaired. So that cut down on a lot of that fraud. So they could securely clock in and out with GPS coordinates. We put all EMR on the device, which is electronic medical record. So in real time, let's say if my mother was the patient who was getting the care and I'm the son, I could go on my app and see exactly what the aides have done. I could see the feedback. I could send that to the primary care physician, and it was all intertwined. So that's kind of what that's what I did in my previous career, essentially digitize that space. And it also made life a lot easier for the home health aides, because there was a lot of miscalculations in the hours they worked, and they would get shorted 2 or 3 hours of work. And to them, that could mean affording food or having to go without food for a couple of days. Home health aides are not paid a whole lot. They should be paid a lot more. I mean, they do God's work. But by digitizing everything, they don't have to go all the way back to the office, turn in their timesheets, get the paycheck. Everything is all digital, and it's a full 365 win for everybody. So that's what I think. So more broadly, yes, I think the industry is primed for expansion. And also, when you keep the primary care physician in the loop, when they could remotely monitor the patient, it drastically drives down the, what's the word I'm looking for? The remittance rates to the hospital, right? So if a person, forgets to administer their medication, they have to go to the hospital, they're on a huge hospital bill. With a lot of these remote patient monitoring tools, digitally, they don't forget as much. And it cuts down on those revisits to the hospital. So the insurance companies love it. So the insurance companies would much rather pay for you to have a home health aide than a $30,000 hospital bill. So it was very, very efficient. Very, very efficient. Miss Bunny says the home health aides would threaten to end service if she wanted to cut their visit short. That's not good. But yeah, that was a very long-winded answer for a very simple question. Jen says there is a large demand for home care. As well, I used to be a home nurse with those, Tom. I love that. So you're saying like live-in nurse, live-in in-home care. Very, very good. Wow, Storm Rider says my dad recently passed and home health made staying in his home possible. Man, sorry to hear about your loss. But to your point, looking on the optimistic side, it allows, the elderly to, peacefully remain in their homes. I mean, that's what most elderly people want. They want to remain in home. They don't want to go to some facility, right? They're comfortable in their homes. So, really, really sorry for your loss. But it's a good point. All right, I think it's getting late. It's almost 11 p.m. Let's head back to Columbus Circle. Yeah, we'll take a shortcut this way. Look at the valets to these buildings. This is 30 Riverside Boulevard. Very luxurious. Wow. I have to cross here and get a closer look. The lobby looks very, very well done. 2 Waterline Square. A lot of times the developers kind of skimp out on the valet area and make it look not that inviting. They did a really good job here. Nice fireplace as you walk in too. Almost looks like a fancy hotel lobby, doesn't it? I know, DJ says it looks like Miami. It does. This looks like something you would see in Miami. Beautiful fireplace. Beautiful over here. See, I never come over here because there's no reason for me to come so far over this way. So I'm actually kind of glad we did. Oh wow, look at this pool. So now leasing studio to 4-bedroom luxury rentals. Beautiful looking pool. You know what this strip reminds me of right here? And I think a lot of the New Yorkers in the chat are going to agree with me. This reminds me of Long Island City, doesn't it? This kind of zigzaggy, like how the road snakes around and it's right on the water. And you have all the new luxury condos. This little block right here reminds me a lot of Long Island City, Queens. Right, Latha? It almost looks exactly like Long Island City. Well, not exactly like, but very similar. Where all the restaurants are. I forget the name of this one Italian place. I actually want to go back. It was actually really good. I forget the name of it. But it was right in Long Island City. Wow, look at this. Huh. I'm actually kind of getting sold on the neighborhood. One bedroom, only $5,200 a month. It's actually not bad, but the square footage is probably very, very small in some of these newer developments. Storm Riders is one bedroom, 5,200. Let's guess how many square feet that one bedroom is. I'm gonna say under 800 square feet. I'd say maybe even like 670 square feet. Maybe somebody could look that up. What's the square footage of a one bedroom there? I bet they're teeny one bedrooms. 650. That is a small one bedroom. But if you guys have enjoyed the live stream tonight, leave a like on the video, subscribe if you're new here. We do these streams every day starting at 8:45. Storm Riders says it's 534 square feet. Exactly as I expected. See, you know, in a lot of these newer developments, guys, developers are shrinking the square footage of these apartments. So they say, oh, a one bedroom apartment, a two bedroom apartment. They're not the two bedroom apartments of, you know, the 90s or the 80s when things were big. They're very, very small. They do that to command a higher price per square foot for the comps. And there is studies that show most people don't use all the square footage. Darren says, do I take an Uber home when I sign off? No, I don't have money like that. I don't have Uber money. No Uber money for me. Hey, Mark Summers, what's going on? Big day today. You're in the real estate business, I'm obviously sure you've heard. Storm Riders, get some sleep time deals are waiting to be made tomorrow. Indeed, they are. I'm gonna blow out the stream right as I get back to Columbus Circle. But I thought we covered a hell of a lot today on this pushing over 2 hour stream. pretty much covered it all. Yeah, guys, Ubers in New York City are too expensive. I'd rather just walk or take the train. I mean, Ubers add up. If you're doing $40 a day on Uber, which is very doable, it's very, very easy to do $40 a day on Uber. 40 times 7, what's that? 280? 280 a week on Ubers. 280 times 52 weeks in a year, what's that, 15,000? $15,000 on just Uber? No thanks. You can see how it adds up. Someone says that's why I'm kind of sheepish on Uber stock. Let's see. I think Uber's trading into new all-time record highs. You know why I'm bullish on Uber stock for the long term? Well, my phone just died. We'll save that for tomorrow. We'll cover Uber tomorrow, but I'll give you my bull thesis for Uber tomorrow. And that's going to be an interesting conversation. I think that'll be my favorite conversation of the week. The reasons why I'm bullish on ride-sharing companies like Uber. And it might not be for the reasons you'd expect. This is North Hall, but John Jay sold this back to the city, if I remember correctly. I think they did. But this is where I had most of my classes. Look at how old. No AC. This had no air conditioning. And it looked the exact same when I went here. Everything rusted, everything dilapidated. Literally looks the exact same. It looks like everyone just locked and walked out. Anyway, all right, let's call it a night. Well, thanks everyone for joining. I thought it was very productive on this Fed day. If you enjoyed it, leave a like on the video, subscribe if you're new. Tomorrow, be on the lookout for our free investing newsletter. We'll send that out after the market closes. And until then, signing off from New York City. Western Mass Dave, Mark Summers, Jen Claus, Busy, Jake from Florida, the LT Prod, Anthony, Professor Dario, Hang with Mark Mom, Janice, DM, Jay, Richard Vogel, Steve, Libby, Mark Davis. See you guys in the next one. Take care.